Hey, it's Stearns. Today I want to talk to you about down payments for mortgages. It's really all over the place right now, and the rules keep changing in the marketplace. So I want to give you a rundown, just basics on the mortgage down payments and some of the costs associated with it. I'm not a mortgage lender, but I do recommend you talk to at least 2 mortgage brokers to see what they're offering, because they're not all the same and there's different fees, so you want to compare apples to apples. But let's get started talking about the down payments. The biggest block of mortgages out there are usually FHA mortgages. Okay, what's the down payment? It's 3.5% down payment. That's 3.5% of the sales price you need to have as a down payment. And some of the programs will allow you to get gifts from family members, but it's got to be well documented. The max amount is $765,000, just over $765,000 as far as the total amount. Your closing cost, the closing cost is 3%. Now you can always ask the seller to contribute and pay a majority of that closing cost for you, but it depends on the marketplace. A lot of the markets are getting multiple offers, and the seller doesn't want to pay your closing costs as a buyer, and the market doesn't dictate for them to do so, but it is possible. Mortgage insurance. The mortgage insurance on an FHA is 1.75%, and that's part of your monthly payment that's on there. And it does stay, that's an upfront cost for the mortgage insurance, and there's a 0.8% that's a monthly fee. It's a lot of money, and it's set there for life up until you refinance the property. The next mortgage is a VA mortgage. Great program for our veterans. No money down, okay? And the loan amount is $1.5 million. That's a lot for a VA loan. There are points, like a funding fee that the VA has. It's not money they put in their pocket, but they use it to protect and insure the loan if they default on the property. I don't like to talk about defaults, but it does happen. The VA funding fee for a first-time veteran to use their VA the first time is 2.3%, and that can be financed on top of the mortgage. A second-time use of the VA is 3.6% of the loan amount, and then if you have disability, you could actually get that 0 points on the loan. So that's a great opportunity with the disability. For the closing cost of the VA, you cannot finance the closing cost. It's actually around 3%. So the VA, most folks think, hey, I don't have to pay anything. No, there are closing costs that need to be covered there. In my video after this, I'm going to talk about getting those closing costs down with lender credit. So please make sure you watch the next video and subscribe and send questions. Conventional. A lot of people say, oh, I need 20% down. No, you don't need 20% down for a conventional. In fact, second mortgages are coming back. So for a conventional loan, you need 3% down. It's for a first-time buyer, okay? Your credit score needs to be above 700. If your credit score is below 700, you're not messing with conventional, because there are other fees associated with that. So if your credit's over 700, go with a conventional first-time buyer. Your closing cost will be about 3% of your closing cost. There is a mortgage insurance for that. It's 0.32 up to 0.9% on your monthly payment, depending on your credit score. If you can come up with 5%, that's even better. But most people think you have to have 20% down. 5% is what you need for a conventional. We've had a couple deals where we're doing 80-15-5. That's an 80% first, 15% second, and then a 5% down payment. And those are great. The first mortgage can go up to $765,500, and then the second, depending on the amount, 15%. That's a great way to avoid that mortgage insurance, okay? But 700 is the magic number. So please send me questions, subscribe. Thanks for watching.